Welcome to Electrified. It's your host, Dylan Loomis. Happy Tuesday to all of you, and a quick shout out to my newest patrons, Marty S. and Greg E. Thank you for choosing to support the channel. First up, an announcement from GM set to invest $6.6 billion in Michigan over the next several years to increase electric pickup truck production and build a new EV battery cell plant. This is all part of GM's plan to have a North American production capacity for electric vehicles of 1 million units by 2025. Listen to this, GM has said it will sell more than 1 million EVs globally by mid-decade and overtake Tesla as America's top seller of EVs during that time frame. This just makes no sense. Even if GM sells 1 million EVs globally by 2025, let's say half of them are in America, well, that's 500,000. Tesla's basically already doing close to 500,000 in America now, and we know that in 2025, Tesla will be doing significantly more. Somebody needs to check on Mary Barra, as she said it again. We'll have the product's battery capacity and the vehicle assembly capacity to be the EV leader by mid-decade. What she is forgetting is that you also need the demand. To break it down, $2.6 billion would be for a battery plant with LG. The other $4 billion would be to convert the Orion assembly plant to make electric trucks starting in 2024. GM is still investing to the tune of $510 million in non-electric vehicle upgrades. GM is saying that a majority of these 1 million EVs will be built in North America. Orion is expected to produce 360,000 vehicles annually by mid-decade, and Factory Zero is targeting 270,000. GM's battery plant with LG is expected to open in late 2024, and it seems as though they are going all in with the pouch form factor. Just real quick, if your Tesla has the repeater glare problem for the blind spot monitoring camera, Tesla Gurus uploaded this video with a DIY fix. There's also a Reddit thread, so I will link them both below in case it could help you out. Tesla insurance holders will now be able to store their insurance information in the Apple Wallet app on an iPhone. You do need the latest Tesla app to do this. And one thing to note, I believe certain states still require you to actually have the paper verification of your insurance. Hopefully in the future that changes and we can move to a digital only version. Gary Black shared, Moody's raised Tesla's credit rating by 2 notches to be a one level below investment grade, so they are still technically a junk rated bond, which is insane. Moody's Tesla rating is now the same as S&P's, which already rated Tesla BB+, also 1 level below investment grade. Gary expects the S&P to upgrade Tesla to investment grade soon after Q4 earnings. Personally, I think these ratings are ridiculous. However, it does have some impact because certain mutual funds, certain hedge funds will have stipulations where they can only invest in companies with investment grade debt. So given that Tesla is not there yet, that could mean more people buying Tesla once they are upgraded to investment grade. I want to take a second to walk through what I will be watching tomorrow. Tomorrow's video, I'll probably release one early in the day, just well ahead of Tesla earnings as we all take that in. And then on Thursday, we'll do a recap and take a deeper dive into this chart. And just FYI, I haven't done much public analysis of Tesla financially just because it's already in great hands. There's a few people that already do it and they do it really well. I just wanted you all to know behind the scenes, I still love this stuff and keep up with it, and maybe going forward we'll cover it more. A quick orientation to this data, it's essentially just pulled over from Tesla's shareholder deck in the way they present the info, and then I removed and added certain features, like I added X regulatory credits just because I like tracking Tesla's auto margins without regulatory credits as if they didn't exist. Tesla does not actually provide that data. That's why I have it in gray. The green columns are going to be fiscal year totals, so we can compare fiscal year 21 with 2020 in the green. The yellow is the year-over-year change, which will be fiscal year 2021 compared to fiscal year 2020. And I do have Q1 and Q2 hidden just so you can see more of the screen. And Q4 is what we're going to be filling in with the data tomorrow. And then these will auto-populate with those updated Q4 figures. So right now, this green column is basically through Q1, 2, and 3 for this year. So the number one thing I will be watching tomorrow is automotive gross margin. So far this year, through the first 3 quarters, Tesla is sitting at 28.6% auto gross margin compared to last year where they ended the year at 25.6%, up 3%. So if this can push over 30%, that of course would be an excellent number and one that I'll be looking for. To be fair, even if it comes in under 30%, given all of the supply chain and the inflation pressures, any number in this ballpark is still very good, just to keep the context clear. And for today, the last thing I want to show you about this chart is for the operating expenses and income from operations. Think of this as Tesla's core business model. So if we plug in an estimate for operating expenses Q4, let's just say 1750 or 1.75 billion. That would mean Tesla has grown their operating expenses about 42% year over year, which is to be expected, right? It's a company, it's growing. As you have more factories, more employees, your expenses are going to go up. However, then we look at income from operations. Let's just put in a conservative figure and say it stays basically the same as what it was in Q3. So that would mean for the year, Tesla grew income from operations 196%. So what this is telling you is that Tesla raised their expenses roughly 42%, yet it grew the income from its operations, like the core business, almost 200%. This is where Tesla's magic of leverage comes in. And with these two random numbers plugged in, which are conservative by the way, that would take Tesla's operating margin to 16.4% for the year, up 10% year over year. I'll tell you what, since we're here, let's do one more for good measure. Let's jump down to net income from the GAAP perspective and type in a conservative $1.5 billion that Tesla does in net income for the quarter. That would mean Tesla's net income for the fiscal year 2021 grew 551% over fiscal year 2020. This is basically the profit, the bottom line that Tesla is making, while only having their expenses grow 42%. This is absurd and is a huge part of the reason why I am so bullish on Tesla over the next few years and beyond. Tesla's operating efficiency and the rate at which it is generating these profits really is unprecedented in the auto industry. You pair that with one of the most exciting product roadmaps of any company in existence for the next few years, and the fact that it's addressing some of the biggest addressable markets on the planet, and you have a recipe for good things to come, but we'll talk about this more tomorrow. Gary Black shared that the street is expecting fourth quarter earnings per share for Tesla of $2.36 per share, and Gary is at $2.55, so remember those two numbers for tomorrow in terms of earnings per share. Sawyer Merritt on YouTube shared some drone footage of the Tesla Semi factory, so I wanted to share that with you. And as you get an idea of the scale and the location of the Tesla Semi factory from this video, there was another report that was shared by Clean Technica, and they said there's a logistics company down the road called Lawson Drayage, which has cleared an entire area which might be a staging for transporting Semi for delivery. It's a wild guess, but they have a connection because they have some supercharger equipment on the property and have for a long time. Sawyer also shared all 4 Tesla Semi megachargers have been fully installed at Giga Nevada, are ready for action, confirmed they will be doing that 1.5 megawatt charging rate. Also, 210 megapacks were spotted, worth about $291 million. This chart shared by Sam Corris from ARC showed 2021 the BEV share of global auto sales was 6.1%. Gary Black actually said this is the one chart he would show other portfolio managers in an attempt to convince them of Tesla's future potential. The two biggest takeaways on this chart: one, we are still only at 6% EV adoption globally. This is supposed to go to 100%. That is an absurd level of EV growth over the decades to come. Number two, this is forming that beautiful S shape. There's a lot of people and analysts that are for some reason expecting some sort of linear type growth like this. However, as we know, disruptive technology typically forms an S curve with adoption, so we are hitting an acceleration point. This was awesome in case you missed it. Gordon Johnson said, "Hey Hertz, I checked your availability of Model 3 cars, you know, the ones you had Tom Brady commercials made on at LaGuardia Airport, a popular hub, and they're sold out all the way through October 22. I didn't check November. Do you have the cars or was this simply a pump?" Hertz responded, "We did purchase 100,000 Teslas. They are very popular. Thank you for your interest, Tony." Holmars then added some confirmation. Here we have a Hertz location with a bunch of Teslas in the parking lot and more being unloaded. He then added, "This is the packet they give you when you rent a Tesla. Before they hand you the keys, they ask, have you ever driven a Tesla before?" A quick note here, Christian shared Tesla removed the unsafe following and forward collision warnings from the safety score. This actually first happened for some people a few weeks ago, but it has not gone away for everyone, as many people still actually have these features factors on their safety score. Tesla Scope said unsafe following and forward collisions are still being recorded and accessible via the safety score API. They add, depending on the state, some safety score data is no longer displayed on the mobile app, but is still logged when you have Tesla insurance. Sawyer shared some new images of the Cybertruck from Giga Texas, and in these images, we learned, perhaps officially, that the Cybertruck will have 2 screens. It will have that binnacle screen right behind the yoke. I don't think this should come as a huge surprise, given that the Cybertruck will be used for work and towing. There should be a separate screen to show some of that data in real time, kind of like the Model S Plaid uses for track mode. Ray for Tesla shared Tesla China ditched the Model Y Standard Range Plus, replaced it with the Model Y rear wheel drive, comes with a few upgrades, the AMD chip, double pane second row side windows, 12-volt lithium battery, priced 20,000 yuan more than the discontinued Standard Range Plus. Last check still indicates delivery window of 12 to 16 weeks. This was an awesome infographic shared by the accountant on the Tesla Motors Club forum. And last up today, Elon said, our biggest limitation with Fremont is convincing enough associates to build cars when they have so many other job opportunities in the Bay Area. Thanks again, Tesla, for doing the hard work of building real products that people love. That'll do it for today. Quick reminder, tomorrow's video will be out earlier in the day, well ahead of Tesla earnings. I like to disconnect and enjoy Tesla earnings, and then on Thursday, we will do a recap and a summary. Please take a second to like the video if you did. Hope you guys have a wonderful day, and a huge thank you to all of my Patreon supporters.